Well, let's look at Walmart. I mean, first of all, another momentum story here. I mean, look at this chart. Can you believe it? In May, it was a share of $117. How do you do? It's now 153. So what happens? Almost a waterfall formation. Investors find a place to buy and they just start to come in and buy. So if you want to buy now, it's almost the same thing here. Lamp ball formation, I always worried about that. It always triggered a bit of a sell-off, so you can get in later on. But I mean, if I look at this chart, oh, can you believe it? I mean, if you look at that, there's the first sign of weakness, and that will be on a weekly chart. And that will be only below $151. While it's above $151, this share is still wonderful in place. And I'm going to do something else here. There's a line, there you are, that combined the resistance levels there, but now it's a support. So my next warning will be below $146.10. But I mean, at the moment, if you want to chase momentum, yes. In actual fact, I think our markets, we had a breather earlier in the year. I mean, the American markets are in a bear market. But our market clearly showed we had a breather earlier in the year. And since then, it was a momentum market that almost any share, if it starts to go, it goes with a vengeance. But I mean, you can always chase it, buy it as close as possible to 150, 180. Make use of a stop loss. I'm going to use that as my stop loss, 146.10. And where can it go to? First of all, maybe it can go all the way to that new high or that previous high, 157.84. That was on 4th of April. And I mean, after that, it's just blue skies. Let's look at Apple. And I think this is the elephant in the room. Remember, Apple is one of the big constituencies in the S&P 500, in the Nasdaq, and they are in the process of trying to see if they can get some of their production done other than in China. And the big thing is China with the COVID is putting some dampening on their products on the manufacturing side. And I see there's also discussions that some of the bigger companies, they're not that keen on Apple anymore. They say that they're monopolizing everything and they want to bully other companies. So maybe that, I don't know if that's true. But if I look at this chart, and this is a weekly chart, and that's why I say we need to watch this share. If this share starts to give problems, all the S&P and the Nasdaq, and even I think the Dow can maybe come under pressure, and then I don't know if our market will hold up. But I mean, our market is like the Springboks. They cannot lose. Even on Twickenham, it was such a wonderful game. They almost, you can say, smashed the English players. But I mean, if you look at here, there's Apple, there's the high at 179. Then it went up to 174, then it tried to breach 171. Every time it's a little bit of a lower high, and I'm saying this is my line to watch, and that is at $131.45. If it breaks below that, I can see that this is a top that's in place, and then we've got these lower highs that will turn into an ugly lower low, and that's on a weekly chart. And where can it go to? And I'm just going to get a few pointers here. There's the first level. I'll give you the level now. And maybe it can go down here. And remember, Apple had a very, very strong rally from 56.95 March 2020 all the way up to 180. So the levels to the downside, if that breaks, it can maybe be 120.35 and even as low as 106.85. But I mean, everybody talks about the Christmas rally. I mean, I think we already had the Christmas rally, but maybe the Dow and the S&P and the Nasdaq is still due for a nice Christmas rally to come. We did discuss Jubilee a few weeks back, and I had a request again, and the person said, yes, Frans, you did show a falling wedge. You are 100% correct. I did show a falling wedge. And if I look at this chart, that falling wedge did not have the opportunity to break up to the upside. There you are. There's that falling wedge. And remember, this is on a weekly chart. It's still going to the downside. And I think patience is key here. And look at this gap. This gap is slowly but surely narrowing up. And eventually it will break either to the upside or to the downside. But I mean, Jubilee is now one of the shares that really saw a little bit of profit taking. It's almost from 4 Rand all the way to 239 in one go. But for me, there's a little clue here, and remember this is a weekly chart. That is the first sign, and if the share can break above 250, I think we can maybe see heading up for 263, and then it can break this falling wedge, and I think then we can maybe see a beautiful relief rally. And where can it take to? I think it can easily take it to this level, 295, because that will be a nice target, and just below that psychological target. But I mean, if I look at the chart still shows us that the momentum is clearly to the downside, that there is still some sellers. Look at all the lower highs. Always remember, a lower high is nothing else than telling you that there's some sellers that is keen to sell in strength. So they wait for a little bit of a rally like that, you can see there, and then they sell it immediately off. But every time that high is a little bit lower than the previous high. And that just shows you that there's still a lot of sellers. And we'll get to a point where, like here, I mean, it got to a point in March 2020 at 47 cents. And then suddenly it started to take off and rallied all the way up to 4 Rand. But we don't know where that level is. Always remember, and I've said it many a time, a technical analyst or a technical trader, they will look at the chart and say, what is the emotional capital thinking about it? What is the informed capital thinking about it? But the fundamental guy will say, let I look at the books. Let I look what the company do. And for me, maybe value is sitting at 2 Rand or 2 Rand 5 cents or 1 Rand 80. And then that guy will wait for that. And when it gets to 180, he says, well, it is offering value now. I'm happy to buy it, and I'm happy to sit with the share. And then he starts to buy it. So it's two different fields here. The one is looking at the chart to tell him something, and a chart can always be either right or wrong. But that's why you've got a stop loss. Or on the other hand, a fundamental guy will say, at this level, it offers value, and then I will get in and I'll get involved. Let's look at J&J Snack. Yes, we did discuss the share a while back, and we did see an inverse head and shoulder, but there's some interesting things now. Apart from that the share started to trigger a nice rally out of that inverse head and shoulder, suddenly we're approaching a very strong resistance line, and that line sits at 165.67. If it breaks above 165.67, this downward trend, and that was a downward trend for almost 2.5 years, it can easily break to the upside and it go to 180.32 and even 196.95. So for those that did buy on this inverse head and shoulder that was here, I think you can still hold on. But the big thing is watch this line. If this line gets tested and the share turns around and you're happy with your profit, just lock it in and go. And some guys that follow me on Twitter will sometimes see that we take 50 points or 100 points on the Aussie. And sometimes we don't even take 300 or 400 points. But in this kind of market, in actual fact, just yesterday, I've sent out an email to my guys and said, this is the kind of market, and I mean with shares clearly not the issue, because I mean from 128 to 162, that's a beautiful rally. But on the Aussie, on the trading side, don't be afraid to take the easy money. Take the 50 points, take the 100 points, because we are in a very awkward market. You've got two school of thinking here. The ones say that the bear market is not yet finished and it can give us an ugly leg to the downside. And then you've got many guys that just say the bear market is all and dusted, it's gone. We need to buy now. So between those two schools, you can either be horribly right or horribly wrong. So the best is if you day trading, take the easy money and you find something else and carry on. But I mean, J&J Foods, above that trend line, it will look 100% okay to me. Well, DRD Gold was also one of the shares that we discussed, and it was a falling wedge, and it just shows you that it also triggered in. There you are. And on the weekly chart, it looks like it's building on some nice momentum. There's the falling wedge there you are, on the weekly chart. And I mean, look at Durban Road per deep. It was also sold off aggressively. I mean, from almost 27 Rand all the way down to, let's call it 9 Rand. It's a massive sell-off, and only now it's starting to give us a beautiful higher low scenario that I usually like. And while we're above that line of 1083, I think we can easily see some levels to the higher levels, and we can maybe go to 12.99 and even to 14.04 cents. And you must always remember, Durban Roodepoort Deep is the kind of share, when it starts to go, you can see here in the past, it hovers around here, but when it starts to go, it can really fly. I don't say it's going to do that because you never know. Remember, there's nobody in the world that is certain what's going to happen in markets. It's always, almost you can say, a guessing game. You look at this, you look at that, and then you're right, then you're wrong. But I mean, Durban Roodepoort Deep in the past showed us if it really starts to go, it almost shoots up to a straight line. But I don't know. But if you still want to buy, you can still buy it, but make use of a stop loss of 946 to protect your capital. Well, let's close off the show with Wesizwe. Yes, we also showed a falling wedge here, and it also starts to come into play now. It also took a little bit of patience, and there you are again. I just want to show you there that sometimes patience pays off, and it broke above 1 rand. It's now at 1 rand 10 cents. It already reached its first target, but I like these higher lows. And for me, I think if we get back to that 1 rand level, that strong psychological level, it's maybe time to look at Wesizwe again, because it looks like it's starting to form sort of a base. And where's my stop loss? My stop loss will be 90 cents. But always remember, commodity shares are cyclical and they can turn around easy. So let's hope for those that did buy the share that it turn around quickly and it goes higher and then reaches for levels of 119, 124, 128, and even if we're lucky we can go to 140. Well, thank you for watching the show. Our time is out. Visit our website www.fransdeklerk.com for more info, and we'll chat again.